Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. And we've got a lot of nervousness in the markets these days, especially with all the conflicts around the world. Geopolitics really sending some folks into safe haven assets these days. So investors rethinking where they should be putting their money. And to help us out this morning in terms of where things are going and what to look at, we've got Chng. He is the Senior Managing Director for Global Alternatives for State Street. Eric, good morning. How are you doing today?
Good morning, Ryan. I'm doing fine. Thank you for having me here.
Great to have you on. So we've got a lot for investors to chew on these days, especially with what's going on with geopolitics. What do you take away from what's been playing out in the markets these days? Now, what has been the playbook for investors?
Well, the market has certainly been very volatile, and investors largely, from our State Street point of view, we're seeing a lot of continued interest in the world of private markets. And recently in the poll that we did, generally in APAC especially, we continue to see investors strategically allocating into private market because of the long-term nature of these investments, and it serves as a counter hedge to the very volatile near-term market. So that's kind of generally the broad trend.
Okay, help us to break it down. Why do private markets have this trade, and why are they a way to diversify and keep your portfolio in a more defensive position?
I wouldn't think that it's purely just a defensive play here, but generally, as we all know, a lot of investments in private market, they tend to be very close-ended in nature. Mm-hmm. So investors would typically put their money into these investments, and you would expect returns over a 10-year period on a close-ended fund nature, and you will start to get those returns, right? So a very disciplined investment allocation process where these investments go in, and we call them vintages every year, will give you that kind of a longer-term view of your investments. And that certainly serves as a portfolio diversification play. Of course, there are more liquid spectrum that we're seeing now in the world of private credit, which is a topic that a lot of people are talking about. And the reason why private credit, or we call them semi-liquid investments, are becoming very impactful or more popular is simply because of the more liquid nature of these funds, giving investor a more shorter access or near-term duration to these investments. Now, if you then take it back to the world of public markets where you invest in stocks and bonds and indexes across the world, they obviously represent a more real-time view of your investments, right? So I think collectively, as you move away from a daily or a real-time kind of portfolio construct, which is public market-driven, going into the semi-liquid and diversifying into the very close-ended nature or the more illiquid spectrum, it gives you a more long-term view of your investments, but also a diversification that you otherwise cannot achieve to reduce that volatility, if that makes sense.
Yeah, so you kind of outlined the main part about private equity. Investors need to take a longer-term commitment. So in that sense, the liquidity is not there as much as you have in a public market or stock market. So you have to take a longer view in return for higher returns. In that sense, what is the level of risk? Who's this for in terms of the type of instrument that it appeals to?
Well, I think traditionally, private markets, the very nature of this investment, private in nature, has traditionally meant that these fund managers would seek investors which are more institutional, right? So you're looking at a lot of the long-term investors like pension funds, the sovereigns, and even insurance company. So they put money in there, and at an institutional level, they diversify their portfolio. So that's kind of like the traditional investor pool. And obviously, as we're seeing, the trend is now moving towards more the mass affluent, we call them, and the more retail kind of diversified pool of capital, because there's just so much interest from investors and away from institutional. The rise of democratization and tokenization and all these trends that you're seeing has meant that fractionalization of these assets are now in play, and a lot of financial intermediaries are looking at how we can give investors access to these assets.
Yep. So I believe there's more democratization of access to some of these instruments with what's been playing out. So more retail investors can get on board these various offerings. All right. Taking a look at the chase for yield right now, folks are trying to find out where to get better yield these days. What sort of yield can you get from private markets?
So private markets is really wide, right? So it covers private equity, which represents a large part of the market even till today, more than 60% of it. You then have, private credit that straddles public and private, and you have very close-ended real assets and infrastructure. So it depends on the asset classes, and obviously the returns can vary very significantly. So I would say that generally when investors look to deploy money into private markets, they would diversify their holdings across generally private equity first as a mainstay before moving into the more illiquid spectrum. So returns would vary, right? It's very hard for us to quote a single figure because it depends on the type of manager that you are picking. And obviously it's a risk and return profile that you have to be very conscious of, right? So, and even within private equity, there's so many different types of strategies that you could deploy capital into.
Yeah, in that space, you also have what's called private credit, which is where you invest in lending money to businesses. How is this space right now when you look at where the risk environment is?
Yeah, so private credit is obviously something that is highly popular because of its semi-liquid nature. We should note that private credit itself, I think, straddles different type of strategies. So it goes from, a very corporate-based lending all the way to asset-backed and unsecured basis. So, again, private credit is obviously offering investor a choice of gaining exposure. And again, the selection is key here, depending on how you deploy your money into private credit managers and, the geography that you're investing into. The risk and return profile will look very different as well. But generally, the returns on private credit, obviously, because of the floating rate nature, a lot of credit managers are able to secure yields that are far more superior to general money markets and general kind of like cash-based investments in the market.
Yeah, I think about making the right choices and selecting the most attractive offers. Where is it right now that appeals to you most in terms of markets or sectors?
I think from a market or sector, what we're seeing is looking at APAC, respondents that we speak to continue to focus on allocation towards private equity, private assets such as credit, which are very hot, and increasingly a lot of investors are looking at infrastructure as an asset class. And so about 67% of the investors that we spoke with recently, they've expressed these three asset classes in the near to medium term. By that, I mean 12 to 24 months and then 3 to 5 years, that these are the areas that they are focused on. Now, obviously, when we look at valuation, and what we're seeing is that although private markets continue to be dominated by North American markets, which is the largest, not just in private equity, but in credit, as well as other asset classes, I think the focus on valuations and the buyer and seller mismatches of primary markets has meant that these investors are now looking at these asset classes and how to deploy capital across thematic Europe and increasingly focus on Asia as the developed economies. They represent a huge opportunity for capital to be deployed. So overall, I think that's the kind of high-level rotational play that we see.
So definitely want to look out for private markets as a way to diversify your portfolio. And helping us to break it down this morning has been Eric Chng, Senior Managing Director for Global Alternatives for State Street. Eric, thanks for your time and great chatting with you this morning.
Thank you very much for having me here.
All right, catch up with you again soon, Eric.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.